Welcome live to FFTVC. Here in our live streaming, we want to teach you one of our trade setups identification strategy that allows us to get ourselves positioned for taking high probability trade entries and make good profits on a daily basis. Now we have studied volatility 75 index, which we are going to show you one of our key strategies for booking consistent profits on volatility 75 index. We are using the 15 minutes time frame for these studies, and it's a very simple strategy that requires you to understand two things about the market. Firstly, study your market average price on a daily basis and use only one candle to determine the action of the market throughout the day. Now, when the trend is clear, the actions are most often well and easily played out, that you can book full profits in the market. But when the trend is unclear, the action can go back and forth, and you get sometimes distracted and have to place multiple times of entries. So, but there is how to determine where you should place an entry from the first point of movement in the day to the last point of movement. So you use one marker to determine where and when to place your entries. This is exactly what we are going to show you, a strategy you can try and see how it works. Okay, so now 15 minutes candle is all you need for your entries and analysis. So you take the first 15 minutes candle that begins the day for your analysis. It's not a candle to be traded, it's a candle for analysis. So you do your analysis on the second candle. So the second 15 minutes candle will be from which point you can start your analysis. Since you cannot see what will happen in the future, you can only anticipate what will happen through what you have analyzed. So this is the 15 minutes candle to be analyzed. To see the high and the low correctly, we have to take off the crosshair from marking that point. Now, we are looking at the way price responds to this market, to the average price we set for this market. And there is a principle for trading this. It is to enter when market breaks the low of the first 15 minutes candle of the day. So wherever market breaks, if market breaks the high, you place a buy above the high and take profit when market rejects a resistance. Then if market breaks the low, you take a sell and take profit when market rejects a support down. So now, for accuracy purpose, you can determine taking profit on 10,000 points, which is the average rate we have seen consistently, though we typically want to book full profit, so we really would not take less than 20,000 points. So, but does the market give you 20,000 points consistently before rejections occur? So we're going to prove that and see which one is best to be taking, 10,000 points or 15,000 points. All right. And then another thing to note is the average price, which is the middle of the high and the low of the first 15 minutes candle. That price is a critical factor that you see the market reacting to consistently throughout the day. So whenever market ascends or descends from average price, market tends to break the previous high and low set as your entry determinant. So you can enter multiple times here. So let's look at how to place an entry in line with trend, and when not to place an entry. So first, we are looking at today's market being the 27th of May, and the first 15 minutes candle had a high at 8392 and a low at 831. So that was 7,844 points distance. So average price will stand at the middle of this candle, and that is at 8351. So 8351 becomes the middle and average price. Okay, so now we'll enter when we see the market breaking out from the low. All right, we'll see the market breaking out from either high or low of this candle under studies. Okay, so first move occurs here. We already have our low set here, and we see the first move low. So you here, that's 1,000 points below the low, and sell 1,000 points below the low and sell. So you sell from 1,000 point downward, and there was a rejection. That was about 9,000. That was about 9,000 points. 9,000 points before the rejection occurred, and when the rejection occurred, you could have taken profit there for 9,000 points of profit. So that was the first profit. Now, since you cannot ascertain if price will continue in the opposite direction or not, when you exit, you stay and watch what price does. If price breaks this low again, that's from where you took an exit, then it is time to also trade another sell from that level downward. Otherwise, you allow price to return back to average price. So that always happens in the day. So here, from the low here, average price is here at the middle of this candle. Average price is here. Now when market returns to average price, there is always this rejection that occurs. You can see rejection occurring here and here and here. So that is market reacting to average price. And of course, if market breaks average price, then you are likely to start selling or trading the other direction. So but in this case, market did not break the average price here, so you are most likely to trade from the rejection of average price. Whenever that happens, you trade from the rejection of average price. So given that the first 15 minutes candle that attempted average price did not break average price, you place an entry on the second candle from average price, and that again gives you another profit. So from average price down to the low again, that gives you another 14,000 points of profit. Okay, and market at this point again returns to average price. So you exit here when you see the rejection from average price. Now you exit, and the market returns again to average price. Then the first candle again that reacts to average price does not break average price, so it means you wait for the next 15 minutes candle and trade again the rejection of average price, which is a sell. So you sell downward again. So here you sold, and as far as average price is concerned, the market continues to sell, and you are secure with your profits, down by 33,000 points. So down by 33,000 points, and of course the day continues, and there is no strong a serious rejection, so you continue to hold your position down all the way down up till the last. You still see you are still holding position, 50,000 points already covered. So you can trade this way. So this gave you how many entries? First 9,000 entry, it took another 14,000 entry, yeah, 14,000 points, and finally 50,000. So 50,000 plus 9,000, that's 59,000, plus 14,000, that's 73,000 points, all in one day. Okay, so that's for here. Now let's see what happens again the next day. If this is consistent, let's see what happens. Alright, so we have been able to trade this successfully using only average price and the next point. Average price and the point where the breakout occurs from. Alright, so let's see again. This was the yesterday's market, the low here. So average price again remains the middle. Average price again remains the middle point. Yeah, so average price remains the middle point. So whenever market moves to average price, okay, so let's turn it out the other way around so we can easily move this freely. Alright, so that is us marking that entry. So remember, you allow the second 15 minutes candle of the day to be born before you do your analysis on the first 15 minutes candle of the day. So that is from 12:15